Foreign investors are staging a buyer's strike against U.S. assets. But not only does this raise serious concerns around the U.S. government's ability to keep financing its massive deficit, but it also proves that global confidence in the dollar is cracking at the highest levels. But that's not stopping the U.S. from printing and spending as if there will always be buyers. But those buyers are backing away not just from U.S. treasuries, but from the illusion of U.S. financial stability. And meanwhile, in the background silently, gold is continuing to cement itself at the center of a new system where the dollar is no longer dominant. So why is this buyer strike happening now, and what comes next? If trust in the dollar is breaking at the top, what does that mean for those of us holding it at the bottom? And most importantly, how can you use this information to protect yourself before it's too late? Let's get into it. A recent $16 billion auction on 20-year U.S. Treasury bonds has rocked the financial system. Despite these bonds offering almost 5.1% yield, or that you would make 5% to just hold these bonds annually, mind you, the second highest payout offered since the Great Financial Crisis, demand for these bonds was dismal. But this is not just a small red flag. This is a massive warning signal showing us that the rest of the world has lost faith in U.S. sustainability of our debt. In fact, the bid to cover ratio, or a measure of how many buyers show up to how much debt is offered, came in at 2.46, below average, meaning there were even less buyers from the start interested in our debt despite the unusually high payouts. But if you're wondering if this was an isolated event or a one-off bad auction, the answer is unfortunately no. Deschutes Bank's head of research himself has said that this was a full-blown buyer's strike led by foreign investors. Investors who historically have propped up the United States deficit by buying treasuries.
Hey, what's up guys? John here. The CEO of America's largest bank just issued a dire warning to all 330 million Americans.
You are going to see a crack in the bond market. It is going to happen. I'm telling you it's going to happen, and you're going to panic. I'm not going to panic.
But what he's saying and what he's doing alongside Warren Buffett, Jeff Bezos, Elon Musk, Mark Zuckerberg, all the billionaires, it's something we all need to follow very, very, very closely, because when in history have we ever seen all the billionaires moving in this direction and then everyone else moving in this direction, and the people moving this way are right? Never. The rich always get richer. That's the law of the land. He is warning right now that we are going to see 8 to 9% mortgage rates.
I just tell people, be prepared for higher rates and slower growth.
7%. Are we really going there? And how
I
does
don't know.
that
When I said 5%,
growth?
they said, are we going there? Yeah, it's possible. Can it go to 7%? The answer is yes.
We're going to see the 10-year hit 5% and a massive credit crunch inside of America. Now, what is an asset worth? Land, a business. An asset is worth what the highest ready, willing, and able buyer is prepared to pay for it. It's not what the seller. The seller will set the listing price, the buyer will set the buying price. And if we're walking into a credit crunch and you got all these billionaires liquidating tons of their stock last couple of years, sitting in billions and billions and dollars in capital, what are they going to do? They're going to multiply their wealth inside that credit crunch. And that's what I believe is about to happen in this